Welcome to the channel Get Rich. Today the company we are going to look into belongs to plastic pipe industry. So before going into the video, if you like this video, please like, share and comment, and if you want a free email newsletter from this channel, please subscribe in the link below. So let's get started. So let's first start with the plastic pipe industry. So plastic pipe industry is currently 30,000 crores in financial 2020 and it is expected to reach about 50,000 crores in financial year 2025. And the CPVC pipes are going to do higher growth when compared to other pipes. For example, UPVC 9.6%, CPVC 18%, and HDPE 11.4% and PPR 11.4%. And if you look into the some shift in demand segmentation, so for example, UPVC had 70% market share in financial 2014 and financial 2019 it reduced to 65%, and CPVC gained from 9 to 10% to almost 15% in financial 2019. And if you look at the Indian adhesive and sealants market, it is projected to reach $1.7 billion by 2026, growing at an estimated CAGR of about 8% over 2021 to 2026. And if you have a look at the Astral Limited, so today we are going to look into Astral Limited. So if you're looking at the Astral Limited, we have 20 plus years of industry presence, and they are the first to introduce CPVC in India, and they are a Fortune Next 500 company, and they have a proven track record in acquisition, integration and turnaround, and they are also having manufacturing presence in 3 countries. They're one of the India's fastest growing pipe companies, and they have 12 strategically located manufacturing plants. They're the most trusted brand, so they have a 4,800 plus employees, and they have exporting to more than 25 countries. And also if you look into their revenue and PAT growth, they are doing 21% and 30% for the past 10 years. And if you look at their depots, they have 12 depot for pipes and 9 depot for adhesive and sealants. And if you look at the distribution network for pipes, they have 850 plus distributor, and for adhesive and sealants they have about 1,300 plus distributor. And they have a capacity, so for pipes plus water tank they have about 2,57,946 metric ton, and then adhesive and sealant they have 92,000 metric ton. And if you look at the dealers, they have 33,000 plus dealers for pipes and 1,30,000 dealers for adhesive and sealants. And if you look at their market share, how much market share Astral Limited is having in, for example, pipes and infra pipes, they have about 7.5% market share, and in water tanks they have about 0.08% market share. And if you look into the adhesive, sealants and construction material in India, they have 3.18%, and then adhesive, sealants and construction material in UK they have 1.84% market share. So as a whole they have about 4.74% market share consolidated. So they are expecting to double their revenue over the next 5 years. So that's good. And if you look at some of their key metrics, so they have a market cap of about 38,000 crores, and their stock PV is 74.2, pretty expensive if you look at that. But we have to look into the growth and their revenue growth, their net profit growth and so on. So we have to look into it. So their return on capital employed is 29.5%, very good. And if you look at the return on equity, 23.6%, that's also phenomenal. And if you look at the debt to equity, so it's 0.04, they almost have no debt, that's also pretty good. And if you look at the price to sales, 9.41, this is an expensive stock if you just look at it, but we have to look at it in the financial statement section. And if you look at the price to book value is also 18.3, looks expensive. And then promoter holding is 55.7, that's good. And if you look at the price chart, this company reached about 2,500 rupees, and currently it had a little bit of a correction, currently standing around just below 2,000. And if you look at the PE ratio, it even reached 140 PE, so that's very high according to me. So but we have to look into their growth, but still that looks very high growing company. And then if you look at the PE re-rating, or it dropped from almost 140 to currently at 70, but its average PE is somewhere around 55, but currently it's trading around 74. And if you want to look at their business segments, they have about 76% of their revenue is coming from pipes, and they have 24% of their revenue is coming from their adhesive business. And if you look at the pipe business, so they have a capacity utilization. So for example, financial 2021 they have about 2,57,000 capacity, and then they are utilizing about 1,30,000. So they have a lot of capacity they have to utilize. And if you look at their pipe business margin, their EBITDA margin in financial 2021, it's about 22.3%. And if you look at the PAT CAGR, or profit before tax CAGR, they are doing about 30 to 32%. That's good to see. And if you look at the adhesive business, they're also growing at 12.5% revenue, and EBITDA is growing about 18%. But if you look at the EBITDA margin, it's 15.5. So their adhesive business is having lesser EBITDA margin when compared to pipe business. So piping business is more profitable than adhesive business currently. And if you look at some of their products, they have piping and fittings, and they have adhesive and sealants, infrastructure pipes, water tanks. So they have plumbing system, so they have different set of pipes for the plumbing system, and they have drainage system, they have different pipes for the drainage system, and they have agricultural system, they have different pipes for this segment as well. And they also have cable production system, they have ancillary pipes, they also have they recently introduced water storage tanks, so they are gaining market share in that category. And if you look at their adhesive business, they have epoxy adhesives and putty, and they have silicone sealants, they have construction chemicals, rubber adhesive, admixtures, solvent chemicals, tapes, and they also have PVA membrane coating, and they have a clear acrylic adhesives, industrial adhesives, instant hand sanitizer, anaerobic adhesives. So they have a lot of products in adhesives as well. So they have pan India presence, so they are present all over India. They have their plants, depots, corporate office, branch office, it's all present in all over India. If you look at their manufacturing locations, they have many manufacturing locations in India for pipes, and also in Aurangabad they have water tank unit, and they also have pipes and water tank units at some point, and adhesives and sealant unit, you can see it in the picture. And they also have a manufacturing location in USA and UK. And they are also planning new plants. They are already almost at the finishing stage in Aurangabad. They soon will have their pipe manufacturing capacity of about 5,000 metric ton. They have some cost savings on logistics because they have plants now in south. Their Sangli plant will have additional pipe manufacturing capacity of about 8,000 metric ton, and this will also have huge cost savings and logistics they are expecting. And they also have a Bhubaneswar Katak plant, so it is already operational, I think. And their production capacity in first phase will be 20,000 metric ton. The total capacity will be 60,000 metric ton. So they are also expanding their facility pretty good. And then if you look at their ad or branding, so they are investing for their branding, and they also have a loyalty program for plumbers and dealers across the country. That's also good. They are also doing their advertisement as an associate partner of Mumbai Indians, official sponsor of RCB, and team sponsor of Kolkata Knight Riders. So they are doing a lot of marketing in IPL, so that's also good to see. And if you look at their innovation, so they are first to introduce some of the pipes like CPVC, UPVC, and some other category. They are like first to introduce in India. They have a lot of products. That's good. They are innovating. And also in their adhesive business, they have Salvo Bond and then Resi-Wood. So they have like even in the water tank, they are introducing India's first water storage tank with antiviral copper shield. So they are also having multi-layer composite pipes for hot and cold water plumbing. So they are introducing a lot of new products. They are doing a lot of innovation. That's good to see. So here also in adhesive business, there are a few more products they are introducing. That's pretty good. And if you look at their financial statements, so their net revenue, they are increasing at 13.8% for a CAGR. EBITDA, they are increasing about 25.1%. If you look at the profit after tax, it's growing around 30%. And if you look at the EBITDA margins consolidated, it's 20.9%. Their pipe business have higher EBITDA margin when compared to adhesive business, but in overall they have 20.9% EBITDA margin. And if you look at their quarter over quarter income statement, so in December 2021 they did about 1,099 crores with the operating margin of 18%. They have net profit of 127 crores. So they even in March 2021 they reached a operating margin of 23%, and then it dropped to 18%. And if you look at the income statement year over year, in March 2010 they are doing sales of about 281 crores, and in March 2018 they did about 2073 crores, and in recent year March 2022 they are almost doing 4,000 crores. They almost doubled in last 4 years. So that's good. And if you also look at their for example their net profit, it was 200 crores in 2019, and currently 2022 they are doing about 517 crores. they more than doubled in 3 years. That's because of their EBITDA margin gain or operating margin gain. And if you look at the compounded sales growth, past 5 years 14%, profit growth past 5 years 32%, and the return on equity is phenomenal, 20%. That's also good. And their dividend payout, they are paying very less dividend. They are increasing their payout from 4% 6% to now 10%. And then if you look at their debt to equity, so they are reducing their debt, they now have net cash position, so that's good to see. And if you look at the balance sheet, they are increasing their balance sheet, so currently they have about 3000 crores with 2000 crores in reserves, and they almost have no debt. That's very good for the company. And if you look at the cash flow, so they have a very good cash from operating activities. And if you look at the free cash flow, that's pretty less because they are investing quite a lot, so they are not yet having a lot of free cash flow yet. And if you look at their profit after tax analyst expectation or the sales expectation, so the sales expectation is somewhere around for 2024, so it's 5800 crores to about 7000 crores, a large huge difference. And also if you look at the profit after tax, it's somewhere around 770 crores to about 866 crores, so in that range the analysts are expecting. And if you look at the shareholding pattern, so the promoter holding slightly reduced and it's steady in the recent quarters. And if you look at the FII, so they slightly reduced. And if you look at the DII, if you look at the mutual funds, they slightly reduced. If you look at the FII, they slightly increased. And if you look at the promoter holding, that's pretty steady. And if you look at their mutual fund, what they did in the past months, for example, they sold in August, they sold in September, sold in October, sold in November. After the price fall, they started buying in December and January slightly. And if you look at the mutual fund holdings, so UTI, Axis, long term equity, Axis mid cap, Axis growth, Axis flexi, UTI mid cap, Sundaram UTI, and then Motilal Oswal mid cap 30 regular growth fund, Sundaram aggressive, Tata, Adviles. So they have like different companies are holding this particular share. Different mutual funds are holding this particular company. And if you look at the December and January, for example, if you see there are a lot of funds increased their shareholding in December and January, so they are seeing some funds did not do anything, very few funds sold, so they are seeing long-term potential in this company. And the last section is the valuation section. So if you look at the revenue expectation, 2022 they are about to do 4100 crores. In 2023 they are going to do about 5350 crores based on the analyst expectation. And if you look at the revenue growth in 2024, they are going to do about 6450 crores. So with the net income expected to be 640 crores in 2023 and 780 crores in 2024, with the price growth of with the cumulative net income growth of 33% and 22%. And if you look at the price target with the current valuation, so the current valuation it is trading is at 74. So with that, if you calculate the price target with a P of 74, the 1 year price target would be 2356 rupees, 2 year price target would be 2872 rupees, with the price cumulative growth of 23% and 50%. But then we have to think whether P of 74 is a good P to pay for the company growth. So I am seeing this company to grow about in 2023 they are going to grow about 30%, 2024 21%, but I am more seeing this company in the long term it's going to grow about 15 to 20%. That's what my expectation. But the industry of this company is operating, it's going to grow about 10%. So if they outperform the industry, maybe 15%, 13-15%, maybe if they overperform, then maybe 20%. So yeah, somewhere between 15 to 20% long term after this 1 or 2 years. So personally, for a company have a long term growth of 15 to 20%, 74 P is bit expensive according to me. So I put a P of 60. I calculated with a P of 60. Even 60 seems bit expensive. So they are having premium because they have a very good brand and they are having a very good company. That's why they are P have a premium. So personally, I believe 40 would be and 40 to 50 would be a conservative calculation. But yeah, since they have a very good company. They have a very good brand, so I calculated with a P of 60. So if we calculate with a P of 60, even then, so the 1 year price target would be 1910 rupees, and 2 year price target would be 2328 rupees, with the price cumulative growth of 0% and 22%. So if you ask my personal opinion, so if I am a new investor, if I will invest in this company or not, so personally the risk to reward ratio is not favorable. So for me, so I will not invest in this stock if I am a new investor. For example, if you are an existing holder and if you believe in this company long term, of course, yeah, I believe in this company long term. They are going to grow 5-10 years. They are a very good company, so that's no problem. If you're an existing holder, if you have a long term view of 5 to 10 years, yeah, you can hold this stock. So that's no problem. But if you are a new investor, if you want to invest at this price point, I think that's not a good decision. So that's my personal opinion. So even the peak and re-rate from 74 to 80, 90, we don't know what will happen in the market. But personally, if I calculate the risk versus the reward for this at this price point, I would say it's not a buy, I would say, at this price point. So that's my personal opinion. You can have contradicting thoughts, of course. So yeah, that's my personal opinion. So I would say if you're a new investors, maybe you can find some other companies other than investing in this particular company. So that's my personal opinion. So thank you for watching, and if you like this video, please like, share and comment, and subscribe if you are new to this channel. And also if you want a free newsletter from this channel, please subscribe in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.